If you're having to remortgage later this year, or you might even be thinking about buying a home, well, yesterday's inflation data could actually impact how much you're going to have to pay for your mortgage. The headline is that UK inflation has slowed from 2.8% to 2.6% in June, and that was roughly in line with market expectations, but it's still above the Bank of England's target of 2%. There's been a lot said about how this is a good thing, and I've even seen some people say it could bring down mortgage rates, but that's not necessarily the case. Lower inflation doesn't necessarily mean that mortgage rates are going to fall overnight. Crucially, the Bank of England are still closely watching services inflation, and that only eased slightly to 3.6%. And services inflation is important because it tells them whether or not inflation's really coming under control. Another crucial thing to remember is that fixed rate mortgages aren't priced directly against the Bank of England base rate. They're based on swap rates. So when inflation comes in lower than expected, and remember, this isn't lower than expected inflation, you can see the market start to price in rate cuts, which can then impact mortgage fixed rate pricing. Another thing to point out is that the swap rates have jumped up by around about 40 basis points on both 2-year and 5-year in the last month, and that's fed through to lenders having to increase mortgage fixed rates. Now, it is encouraging, obviously, that we are seeing slowing inflation. There is still an expectation that we'll continue to see inflation increase, and that's mainly due to the price of oil from the conflict in the Middle East. Oil is in everything, so if the price of oil goes up, the price of everything pretty much goes up. The next big date for your diary, if you are interested in mortgages, should be July the 30th, because that's when the Bank of England's Monetary Policy Committee is meeting, and they will decide, or they will vote on, what they want to do with the Bank of England base rate. Personally, I think that will probably be held at 3.75%, but there are some rumblings that we could see an increase, whether that's now or later in the year, I don't know.